It is tax season and you're probably going to use your bank account again to pay your tax bill this year. But what if I tell you that there are a few benefits if you were to use your credit card instead? So let's break it down and figure out if this might be a sensible move for you. If you're new here, hi, I'm Anisha, and on this channel, I help you get the most out of your credit cards and travel more using your points. Alright, let's talk about the good stuff first. Why would you even want to use your credit card to pay your taxes in the first place? So here are 3 perks that I see to doing this, even if it feels like too good to be true. First off, convenience. You could just whip out that credit card and boom, taxes paid. Second, and this one is my favorite, rewards points. You just pay your taxes with a credit card and just like that, cash back, points, even a free vacation to somewhere warm. And lastly, short-term financing. If you're strapped for cash and happen to have an interest-free period going on with your credit card, this can actually help you pull some finances together until you're ready to make that payment. But if you go this route, please make sure that you pay off your credit card bills in time. Otherwise, you'll be hit with really high interest fees as well as late fees. Next, we will cover how you will actually pay your taxes on the IRS website or using other software tools like TurboTax, H&R Block. Then we'll get into some situations when it actually might make sense for you to use your credit card to pay your taxes. And lastly, I'll be talking about the cons of using your credit card for your tax payments because I really want you to know about all the risks and downsides here. Let's get into it. So how do we actually get to the point of paying our taxes? First, we have to go through the entire filing process. So you either do it yourself or you hire someone to do it for you. If you're a DIYer, you're probably using tools like TurboTax, H&R Block, or the IRS website to file your taxes. Once you have filed your taxes and are now staring down at the final bill from the IRS, assuming that you owe taxes, of course, you might be wondering what is the best way to make that payment. If you're using tax software like TurboTax or H&R Block, they provide you a way to make a payment through their platform, allowing you to file and pay all in one place, a convenience that is hard to overlook. These tax software enable you to set up direct bank payments or even use your credit card. However, it's worth noting that TurboTax's credit card payment processing fee is 2.49% with a minimum of $3.95 owed in fee. The official IRS website also has an online payment portal that you can use to make your tax payments online. To access it, log into the IRS site account and navigate to the Make a Payment section and enter your details. Within this section, you'll find 2 primary options for making payments, Pay1040 and ACI Payments Inc., both of which are IRS's authorized payment processing partners. So as you can see here, Pay1040 charges a 1.75% fee with a minimum of $2.50 for consumer, Visa, or MasterCard payments. But this fee increases to 2.89% for business cards and all American Express cards. On the other hand, ACI Payments Inc. charges a 1.85% fee with a $2.50 minimum for credit card payments. The IRS used to have another payment processing partner until last year called Pay USA Tax, which is no longer their partner. So that is why I do recommend that whenever you are making a payment, always go to the IRS website and check for everything, for methods, for credit card acceptance, the fees from that website and use that as your single source of truth. When you file through TurboTax, they might not give you the option to pay using Pay1040, which is IRS's authorized partner. But what they'll do instead is that they'll make you go through their own payment system. And here is the kicker. Their fee is higher, like we discussed, the 2.49% versus the 1.75%. So interestingly, even if you file through TurboTax, you can still use the IRS website to make your tax payments. What you can do is you can complete your filing and in the end, just go select the pay by check option. And after that, you can simply log on to the IRS website, create your account, go to Pay1040 and make your payment using your details like the SSN, etc. And make sure you save the confirmation page as proof of payment. With all these fees, I know what you're thinking. Is there ever a time when paying your tax bill with a credit card even makes sense? And there is. If you can pay it off quickly without getting hit with those interest payments and late fees, I'm here to tell you that you can take significant advantage of all the flexibility and the rewards that a credit card offers. So here are the 2 main things that are going to make it really worth it for you. First is meeting minimum spend requirements. So if you're chasing those juicy sign-up bonuses that come with many credit cards, I'm here to tell you that a tax bill is your best friend. If you have a credit card with a large minimum spend requirement, a tax bill can help you get really close to hitting that target. Take, for example, the Capital One VentureX card. This card comes with a minimum spend requirement of $4,000 that is to be completed within 3 months of getting this card. Now, sure, using this credit card to pay your taxes will come with a fee, but here's the thing, you have to do the math. The sign-up bonus could be worth several $100s and even more, and if that offsets the fee that you paid to process the payment, then you could come out ahead. So while it might seem like a lot of spend at once, this tax bill can actually help you rack up rewards pretty quickly. And you can turn that into luxury travel. And the second situation where a credit card might come in handy is if you are able to get over 1.75% in cash back or points from that credit card. Let me translate. So assuming that you're going to use the Pay1040 portal for your tax payments and that you have a Visa or a MasterCard, you will be charged a fee of 1.75% at the Pay1040 portal. So if you have a credit card that comes with, say, a 2% cash back, you are still coming out ahead, even if it's by a little bit of that 0.25%. Let's take the same example of the Capital One VentureX that gets you 2x points on every dollar that you spend. And the miles that you earn at Capital One, provided you spend them right, will be valued at least 1 cent per point, which means that you're still getting a 2% cash back with this credit card. Now, if you're able to use these miles even smarter, you can actually book luxury travel from it, and the return that you end up getting might be much higher, say up to 10%, so 10 cents per point. Which means that in return for a 1.75% fee, you are getting a 10% return. Let's be conservative and say that we are getting a 2% return, which again means that we are coming out ahead with that 0.25%. So basically, you need to think about whether the math is mathing for you and then make the choice. As for me, I don't mind spending a tiny bit if that means that I can get good rewards from it, which I can then try to use smartly so that I'm getting outsized return from my points. All right, now for the part that we've all been waiting for, the downsides. First up, fees. Big, ugly fees. Whenever you pay such things with a credit card, you are going to be hit with a processing fee. In this case, there will be at least a 1.75% fee charged if you pay your taxes with a credit card. So in the end, it's your decision and you have to think about whether it makes financial sense for you to pay the fee in return for whatever value you're getting with that credit card. Next is interest rates. Credit cards are notorious for charging you ridiculously high interest rates, so it's always in your best interest to pay them off on time. And speaking of things that could bite you in the butt, number 3 is credit utilization. If you charge a hefty tax bill to your credit card, that would mean that you'll start using up a lot of your credit limit, so you need to be mindful of that. Credit utilization is basically the percentage of your credit limit that you're using. So if you're using a big chunk of it, and if this ends up being somewhere around 20 to 30%, that can really impact your credit score. So you want to be responsible when using your credit limit. To wrap things up, should you pay your taxes with a credit card? Honestly, it depends. For some, it might be a good option for short-term flexibility as well as all the rewards that it gets. And for some of you, you may not be a fan of the fees. So all you need to do is do the math, figure out whether it works out well for you, and then decide what you want to do. Thanks for hanging out with me today. If you enjoyed this video, I think you might also enjoy these 2 videos. There's some good info in there, so check it out. I'll see you in the next one.